Welcome everyone. Good evening. Financial Management for Heritage Organizations. This is the 9th in our Strengthening Ontario's Heritage Network webinar series for the Ontario Historical Society. My name is Alison Little and I'm the Program Manager here at the Ontario Historical Society. Just a bit about the Society if you're not familiar with our organization. The Ontario Historical Society is a non-profit corporation and registered charity, a non-government group founded in 1888, bringing together people of all ages, all walks of life, and all cultural backgrounds interested in preserving some aspect of Ontario's history. And just to let you know, 2018 marks the 127th anniversary of the OHS and the 102nd anniversary of our headquarters, John Mackenzie House in Willowdale. Now, our webinar today will begin very shortly. I'll do a bit of technical support, introduce our speaker, and then we'll head right into Heather's presentation. We'll have about 15 minutes at the end for questions, so keep that in mind. Just a few things to go over on the technical side. In order to ask a question, you just type your question into the space provided below question in the menu bar. Very simple. If you can't see the question space, you may need to expand the question section by clicking on it. You'll see a space with type a question for staff, and that's where you write. I'll be going over the questions during the seminar. If there's a very common question that arises, I'll pass it on to Heather right away, but otherwise I'll keep all the questions asked for the end of the session. If you have a comment to share with the whole group, please feel free to use the chat window. I've sent a few messages to the entire group beforehand, so you can use that to chat and we can all see those messages. If you run into trouble during the webinar and you need my help, you can also use the raised hand button. Now this is a small yellow hand also in your menu, and if you click it, your hand will be raised, that's your digital hand, and I'll ask you what I can do to help in a private message. Now if you're finding that the slides are moving very slowly or your audio keeps cutting out, try closing a few other programs. The more bandwidth you're using, the harder the webinar program has to work. If you lose your connection, try closing the webinar window and then re-entering the room using the link you received in your confirmation emails and reminder emails. It's all the same link. Closing and restarting will often solve the problem. This webinar will be recorded, and that recording will be made available to members of the OHS on our website and eventually to the public through our YouTube channel. We will also make today's slides available for download this week, so don't worry about writing everything down. You will get a copy of Heather's slides. A little bit about our speaker. Heather Young has worked in the field of arts management for over 25 years. Her experience includes leadership roles with a variety of arts and heritage service organizations, theater and dance producing companies, galleries and museums, facilities, festivals, and community organizations in both professional and volunteer capacities. As the principal of Young Associates, Heather has provided bookkeeping and consulting services to dozens of organizations and delivered professional workshops, training, and seminars on topics ranging from budgeting to sales tax to setting prices to reading financial statements. She has completed business and strategic planning assignments for an array of arts organizations in Toronto and across Southern Ontario, frequently in partnership with First Stage. For 15 years, Heather has taught accounting and financial management to diploma and continuing education students in Humber College's arts administration programs and Humber's fundraising and volunteer management program. She was a 2004 recipient of Humber College's Continuing Education Award of Excellence for Outstanding Academic Contribution. In 2010, she was appointed to teach finance for the University of Toronto's Specialist Program in Arts Management. And in 2012, Heather was awarded the Sandy Tulloch Award for Innovation in Arts and Culture by Theatre Ontario. So I'm just going to bring Heather in now and unmute her microphone so she can say hello to you. So just give me a sec. Hello, Heather, are you there?
I'm here. Thank you so much for that, Alison.
No problem. So I'm going to pass over control of the screen to you, and let's get underway.
Okay, so tonight we've got a very short space of time. Oh my goodness, 1 hour. It's going to go by in a flash to talk about some aspects of financial management. So Alison and I put our heads together. There's any number of things that we could have talked about, but what we've chosen tonight is to talk about some topics that help to contribute strong financial systems within organizations to support decision making. So we're going to talk about linking your budgeting or planning activities with your accounting and reporting, and also I'm going to give you some ideas about coordinating financial tasks amongst staff and volunteers. We'll talk a bit about producing government forms and also about drafting operating budgets, and there will be time for Q&A at the end. Now, after the webinar, Alison will be sending out a resource document which has a number of links that I hope you'll find contribute some useful content. Some of it is very general stuff like accounting and finance glossaries, and some of it is very specific information, like for instance a couple of you had flagged charities issues, so I've included a couple of websites that deal specifically with the administration of charities in Canada. So I hope that you'll find some goodies in there. We're going to start by talking about covering the financial basis. So a lot of this, my experience with smaller volunteer organizations is that when people's roles and responsibilities feel clear, it's much easier to make sure that you've got the financial bases covered and that people are functioning effectively together. Your financial systems embrace a number of complementary functions. So we're going to talk briefly about accounting and about planning, about managing and connecting the dots as kind of overviews of the whole system. So under the banner of accounting, you need to maintain records, obviously, of your financial activities. So this is the part that people just love, basic bookkeeping, oh yes. Now, it doesn't have to be a big complex thing. I realize that our audience tonight embraces a wide variety of organizations, from folks who are within the umbrella of a municipality and have the municipality's bookkeeping system looking after their finances, to small, very volunteer-driven organizations. So I will talk in a little bit more detail about bookkeeping later on. I'll be thinking at that point about the smallest organizations. I'm more than happy to have any specific questions you have about records keeping. I think the important thing to note is that recording the transactions, although it's really important, it's just the first part of an accounting system. The more important part, the business end of it, is making sure that that system can yield reports that summarize the data effectively. So we'll get onto that a bit later in the webinar as well when we talk about some of the government forms that you have to create. And I've got a few ideas for you about trying to structure your accounting system to make it kind of as painless as it can be to respond to all of the different financial needs that you have. The budget is the financial plan for the year. So when I think about financial planning, I'm mainly thinking about the operating budget. The operating budget covers the entire year. It covers all of your activities. You might also do a couple of different types of budgets depending on what your needs are. A project budget would cover one specific project or event or program or activity or department, one piece of your organization that has specific revenues and expenses associated with it. If you're contemplating a major purchase, like buying new equipment or renovating your building, you may need to do a capital budget. This is very much like a project budget. The difference is that it's directed at buying assets. So that hitches it up to the balance sheet, and it adds a few extra concerns because you're budgeting for something that is going to be important to your organization over a period of years. Whatever type of budget you're doing, ideally the planning will come first before you start spending the money. I realize that that's not actually always an easy thing for people to do. A lot depends on when you hear about funding proposals and whatnot, but the gold-plated standard would be to try to have a plan in place before you go too far down the road. Now, the task of managing and weaving all of the threads together can be challenging, and I would say, in my experience, it can be particularly challenging for very volunteer-driven organizations where you've got sort of a regular turnover in folks every few years, and you are constantly bringing new people in and showing them the ropes and trying to make sure that the whole system holds together. One of the hallmarks of financial management is variance reporting, and one of the critical things that you want to be able to do is to compare your financial plan to the accounting results. So comparing the budget to actuals is really the critical management tool for most organizations, whether they're large or small. So if you can imagine a document in front of you with a column for your budget and a column for your actuals, the variance column would simply subtract one from the other. If the amount that you planned to achieve has been achieved and your budget equals your actuals, hey, there's really not much to talk about. But if there's a big difference between what you thought would happen and what really did happen, then that variance column flags the important things to discuss. So variance reporting can be a very important tool for helping to focus things like finance committee meetings so that you're actually getting to the heart of the matter and discussing the important financial outcomes. A few important questions around evaluating your organization's financial health. Are we meeting budget targets? That's a really great one to be asking yourself. And the subsidiary question to that would be, if we're not meeting the budget targets, is it because the budget was out of whack, or is it as a result of how things have fallen out during the year, things either going better than we imagined or not quite as good as we imagined? And if we're falling short in any area, or if we're going over target in any area, should we revise the plans? So your management structure needs to be prepared to deal with these kind of things. Another type of benchmark that you need to look at is how we're doing compared to past years. This falls under the heading of trend analysis. And what a lot of organizations would do is maintain at least 5 years worth of data in a spreadsheet so that it's easy to look back on where the organization has been in recent years. This becomes a very useful tool for discussing what's going on right now. If you can see that current year's activities and results are in line with recent experience, then that's often a very comforting thing. If you can see that your recent experience is different from what's happened in the past, then that gives you fodder for discussion at finance meetings. So it becomes another tool in your arsenal for dealing with where the organization is going financially. I have a few thoughts on connecting the dots. So this gets back to the idea of clarifying roles and responsibilities. The person who's maintaining your accounting records needs to keep things current, or else the folks who are doing the evaluation won't have the right information that they need in order to be able to assess what's going on. So there's got to be some coordination between the bookkeeping function and the people who are reviewing the statements, whether that's senior staff or boards of directors. Budgets and accounting records should use the same categories to facilitate comparison. Now, this is something that I've seen in a number of different guises over the years. If you're a freestanding organization, then things are kind of within your power to shape. If you're part of a municipality, for you municipal folks, this is where I've seen people trying to jump through flaming hoops as they try to fit their museum's activities into a set of accounts that were designed for a city or a town rather than a heritage organization. So it can be a harder task than you would imagine, but trying to align the way in which you think about your plans to the way in which you think about your results greatly facilitates the task of assessing what's going on. Finally, whoever's responsible for doing the financial plan should be constantly referring back to past results, because that is a key support to keeping your plans realistic. It's very tempting to imagine that the year that you have the brilliant idea for the great new project, that suddenly money will appear because it's such a fantastic idea. That's something that I have actually yet to see happen in my career. The fact that you've got a wonderful idea does not mean that it will find support. It's much more likely that this upcoming year will unfold much the way that past years have, and that the organization will stay more or less in the same zone as it's been. So that's a much easier thing to achieve, and it's got to be sort of built into your budgeting process. The folks who are doing the evaluating, which I would imagine for many organizations would be the board of directors, that would be a very typical role, need to be comfortable providing feedback. So a few specific ideas about it. Part of the feedback has to be about the document itself. Do you find the categories helpful? Have you got enough detail to actually be able to evaluate what's going on and be able to feel comfortable that you're assessing based on the best possible picture of the organization's activities? You also need to have a look at the contents. Now, I've talked about doing variance reporting, looking at the budget against the accounting actuals. So that is, as I've said, the sort of hallmark of financial management. That's something that is absolutely essential to do. But beyond that, have a good look at whether the contents of the report look right to you. I've worked a lot over the years with people who feel that they are very inexperienced at dealing with finance, that, you know, they may know their own organization, but they haven't got a lot of breadth or experience with other organizations, and they doubt their own ability to perceive any problems or issues. Well, I can tell you, based on experience working with people, if the numbers look weird or surprising to you, they really should be investigated. If something looks to you like it might be odd, then quite likely you're right. I've had that experience over and over during the years where somebody will tell me in one breath that they don't know what they're looking at, and in the next breath they'll ask a astoundingly astute question and put their finger right on a problem. So in terms of evaluating, if you find yourself in that particular position of trying to build your confidence, the best way to do it is ask all of your questions. Don't doubt yourself. Just go ahead and ask and make sure that you understand the finances. If you're looking at your organization's finances, and I know that a lot of you are treasurers or presidents or folks serving on the boards of directors, if you don't understand the numbers, who is going to understand them? And if you're receiving results from a staff member or a bookkeeper or a fellow board member and you can't quite figure what it means, it's got to be part of your role to ask the tough questions and pursue it to make sure that you actually understand what's going on. So, concluding comment there, finance is a team sport. Everybody has to know what their role is on the team and actually pursue that role and jump in and make your contribution to the finances of the organization. Just a bit of a side issue, I thought that this would be an interesting thing to throw in because, well, mainly because it's cropped up in my working life a few times recently. I just wanted to say a word about authorizations. So, in the life of your organization, the people that are involved need to perform all sorts of financial tasks, from opening and managing bank accounts to receiving money, you know, the folks that are selling membership or selling admissions and events or whatever, people who are spending money, people who are arranging from time to time perhaps to borrow on behalf of the organization, and the folks that are charged with either communicating with the government on tax issues or communicating with all of the folks around the organization, funders, members, donors, all of the folks that give you money and contribute in different ways. It's a productive and important thing to think about who should be charged with managing all of those different types of activities. I just wanted to spend a moment on authorization for spending because of all of the organization's activities. I would imagine that for most of you, the bulk of your transactions have to do with spending money for the organization. You may think that whoever gets to sign the checks is the person who does the authorizations, but that's too late. The real moment when a commitment is made is the moment when somebody agrees to purchase something on behalf of an organization. So if you're in the kind of situation where decision making is distributed and you've got various volunteer committees who are charged with creating events and programs and whatnot, if they are out there making commitments and spending their own money, they really need to understand the organization's budget goals. So they need to be brought into that process, at least to the extent of understanding for their particular event or program fits into the bigger picture. They also need to know how far they can go with spending money and making commitments. So you might find it useful to think about a cap on authorizations where the person, for instance, who's in charge of an event is allowed to go ahead and spend up to X dollars. If they need to spend beyond X dollars, then they need to come back to the executive director or the board or the committee chair or whoever is the responsible party to get any additional expenditures authorized so that there can be some centralized control over what's going on. What a lot of organizations will do is record who's authorized to perform various tasks. Write it down and keep a record of it by position titles rather than individuals' names. Now, I had a scout around on the internet just for different samples of this. And it was very interesting. I found that many very large institutions have very elaborate sets of policies around this. I found fewer for small organizations, but in my experience, it's just as important for people to know exactly where their limits are and to be able to have that in writing so that it's passed on as people come onto the board and eventually change over. Another aspect of people working with each other on financial matters and gaining clarity in their roles and responsibilities is maintaining proper segregation of duties. So the gold-plated standard is to divide financial responsibilities so that more than one person is always involved in financial processes. This is important from a few different points of view. First of all, there's having clarity about what it is that you're supposed to be responsible for and knowing what your limits are. But segregation of duties is also an important aspect of financial control and risk management. Organizations try to structure this so that people are supporting each other and are able to check each other for errors and make sure that things are well organized. The thing that I just skirt around saying is segregation of duties also actively discourages dishonesty. So that is something to bear in mind. None of us like to think about this, but small volunteer organizations are at some risk of fraud and bad behavior on people's parts when they're left alone with the money. So it's just something to bear in mind. For instance, a couple of examples to think about. I'm sure all of you are managing events where you're dealing with cash at the gate. So one strategy would have two people to count the night's take together, or a different strategy would have one person deal with the count and prepare the bank deposit and hand it off to somebody else who double checks the deposit and goes to the bank the next day. Ideally, the person who's maintaining the financial records would not also be handling the cash or have signing authority. So to the extent that you can, having the records keeper be independent of having control over spending is an excellent control. Ideally, managers don't sign checks to themselves. Now that is a nightmare for small organizations to manage, and I would have to say that amongst the organizations that I work for, more often than not, managers do sign checks to themselves. Often, though, it's in the context of double-signed checks, so that there will be a staff person and a board member who double sign to each other, so there's always two parties involved in authorizing the release of funds. All of this stuff is obviously far easier to achieve in larger organizations, but small organizations can still get part of the way there, and it's really worth having a little bit of a think about. Now, I wanted to move on and talk about characteristics of a strong accounting system. For those of you who are familiar with accounting principles, these actually come pretty much out of GAAP, generally accepted accounting principles. So a few ideas for you. And I guess the framing comment that I would like to make is that whether your accounting system is on formal computerized accounting, some big municipal system, or whether you're keeping it in a shoebox under your bed, you can achieve a lot of this stuff. Really, the point behind an accounting system is that it works for you, that it yields the reports that you need when you need them. So, a couple of specifics in this line. You should have timely reports. You need to be able to compile all of your financial transactions into meaningful reports at the point when you actually need them for decision making. So there's no gain in getting yourself into a position where you've got to make a decision all of a sudden and everybody's looking at each other going, gosh, I wonder what's happened so far. We don't really know where we stand financially. So getting into a good routine about producing financial reports on a regular basis and reading them is an excellent thing. Your accounting system should be able to provide feedback on plans. So you need to structure yourself in such a way that it's easy to compare your budget to the actual accounting results. Your accounting system should be verifiable. What that means in accounting terms is that you should have paper documentation that support the figures on your report. The gold-plated standard would be that every financial transaction that your organization undertakes should have an accompanying piece of paperwork. This is the sort of thing that's actually usually fairly easy to achieve on the expense side, because commonly when you buy something, you get some sort of a piece of paper in return. You get a bill from the supplier, or you get a cash register tape, or you can create petty cash vouchers for yourself for small internal office expenses, but usually it's fairly easy to document expenses. Much harder to document accurately on the revenue side because transactions, well, let me give you an example. How can you know for sure that you've gotten all of the membership money? How can you know that something bad hasn't happened, as happened to one of my clients, where they moved a desk, pulled it out from the wall, and found a couple of stale-dated checks from members who had wanted to renew, and their money was never received because the checks fell down behind the desk. There's nothing in your accounting system that would cover you for that sort of thing. There's no documentation that you can create for revenues that would flag that kind of thing. If you're talking about expenses, there is a flag in the sense that your supplier will usually come after you if you haven't paid the bills. So you have to work a bit harder on the revenue side to make sure that you are creating the best possible structure for yourself, so that, for instance, you've got membership invoicing or renewal forms, that you've got donation pledge forms, or some kind of tracking mechanism that allows you to record revenues as they're received and gives you some sort of control or benchmark to ensure, to the extent that you can, that you've gotten all of the money that you're entitled to. A strong accounting system is also a conservative accounting system. Now, this has nothing to do with politics. What accounting means by conservatism is that you always go a little bit on the low side of realistic as far as revenues are concerned, and a bit on the high side of realistic where expenses are concerned. So you want to be just maybe a tad pessimistic. You don't want to be either idealizing or catastrophizing what's going on. You want to stay in the zone of realism, but just make sure that you always allow yourself a little bit of wiggle room to make sure that if things don't go the way that you thought, you've got a little bit of slack in your system. Finally, one of the characteristics of a strong accounting system is, believe it or not, that you do more or less the same stuff in more or less the same way year over year. Yes, it is actually as boring as you may think basic bookkeeping is. It is that, and that's a good thing because it helps to ensure that your reports are comparable year over year. When I'm talking about reports being comparable, I don't mean that the financial results themselves are necessarily the same. I mean that the information is structured in the same way year over year, so that when you look back in time, it's easy to see the financial patterns, that you've captured the same information in the same way. This doesn't mean that you can't change your report formats, but it does mean that you have to be very conscious about how your accounting system evolves so that you can maintain that backwards comparability and see where you've been. On the slide, I've thrown in the word sectorally as well, because it's another thing to bear in mind. You know, you should be maintaining your records in a comparable way to organizations who are like you. One of the features of life in our sector that tends to control for that is the fact that so many organizations apply for government funding. I've talked to different funders over the years, and it is as we suspect. They design, or at least some of them design, their grant application forms so as to try and help organizations standardize. Now, this obviously helps the funders considerably when they're receiving a pile of applications from people. They need to be able to compare easily from one organization to another. Bookkeeping tips. So here we go. Keep your paperwork. If in doubt, throw it in a drawer. You can always toss it later. If you think that it's useless now and you throw it away now, you can't get it back later on. Or at least it becomes a pain in the butt to try and reproduce paperwork that you have thrown away. So when in doubt, keep it. There are actually legal standards for keeping accounting documentation. So this is something that hadn't occurred to me actually to add to the resources, but you know, if anybody's interested, it would be very easy for me to provide the link. The Canada Revenue Agency sets out standards for retention of accounting documentation. The short story is that you need to have complete details of your financial activity for the current fiscal year plus the 6 previous years. That's the time period within which the Canada Revenue Agency can come calling and audit you. Now, whatever type of accounting system you have, the key things to bear in mind are that it should be consistent, systematic, and methodical. If you were to look at different accounting software packages, you would find that the user interfaces on all of them are different. They're all proprietary software packages. They have many things in common with each other, but they've all got differences as well. The underlying commonality, though, is the fact that they are systematic and methodical. However you choose to slice and dice and organize your information, the main thing is to set up a pattern and a structure and keep it going. And if you're in a position of not having a great deal of accounting experience, but being the person who is responsible for doing it in your organization, if you are consistent and methodical about how you're doing it, any reasonably capable bookkeeper or accountant should be able to take your nice methodical work and work with you to do what they need to do to turn it into a set of formal financial statements. Another important thing is to try and maintain a regular schedule. Try to get into the habit of updating the bookkeeping on a regular basis. Monthly works well for lots of organizations, mainly because banks still, to a large degree, send out monthly bank statements to people. So trying to stick with that regular schedule ensures that you're looking at things as they evolve and staying in touch with what's happening financially. Finally, no matter how basic your system is, one of the key things to do is to compare periodically to the bank statements. You know what you have issued in the way of checks and deposits. The bank only knows about them when they see them from you. It's always possible to do a bank reconciliation. The heart of it is comparing what you have done to what the bank has seen. You should see your information flowing through the bank. There are a couple of curves. One is that you'll issue a check and you don't necessarily know when the recipient will cash it. So the thing that you're issuing as a February check may not show up until March or later in the bank, depending on when the person actually cashed the check and took their money. The bank also adds a certain amount of information that you'll see their monthly bank charges and whatnot. We're all familiar with the banks taking bank charges, that's for darn sure. So your records need to pick up that piece of information from the bank. As long as you're having a good look at the bank statement, it will help you keep in line. The thing that I've seen inexperienced people do the most that has the greatest potential for embarrassment is to flip on the online access to your account, look at what the bank says, and assume that that's how much money you have. That is potentially how much money you have, but what that won't show is how many uncashed checks might be floating around out there. So keeping in touch with what's actually passed through the bank is a really critical thing to do. Now, for very small organizations, I just wanted to throw this out there for consideration. This would be a very basic little bookkeeping system. I've seen plenty of people use it. Hey, when I started my own business, this is what I did for myself, and it works like a charm. It's easy to evolve it upwards and elaborate it. Really, all you need to do is go to the Business Depot, buy an accordion file with monthly pockets. And each month that goes by, just pop all of your paperwork into the appropriate pocket. When you get to a point where you need a report for that month end, pull out the paperwork for the month, sort all of the documents into categories, add up the categories, and the totals for each category become your report. Now, for those of you who are familiar with accounting, this is going to give you a report for revenues and expenses. It will not produce a balance sheet. But for small organizations, this is often exactly what you need. It's completely sufficient for most reporting that you would have to do to funders. When you get to a point of needing more elaborate reporting, when you get to a point of needing a formalized accounting system, this is the sort of thing that could be easily converted into accounting software. A couple of other thoughts. Particularly in situations where the accounting records wind up being passed from one volunteer treasurer to the next over time. Pen and paper, still a good thing. I think not many people are probably using them. I think most people would at least have moved on to Excel or some form of spreadsheet. But hey, pen and paper is the most transferable way of keeping accounting records, that's for sure. If you step it up to a spreadsheet, then you start having problems potentially transmitting from one person to the next in terms of compatibility. By the time you're ready for accounting software, you really do have to be ready to make a bit of a commitment, because that would certainly be the most challenging thing to pass from one person to another. It implies that you assume that each individual is going to have the same hardware platform, and also that people will make the commitment to actually learning how to use the accounting software. Just one note on that for those of you who are Mac users who are thinking about accounting software, it's difficult to find accounting software out there for Mac. I think it's getting a little bit easier, but by and large, Canadian accounting software is written for PC. As things go on, I'm sure that web-based packages will become more common, and what I'm telling you tonight is going to evaporate into the mists of history. But as it stands right now, maintaining consistency of platform from one volunteer to the next can be a challenging thing. Now, somebody had asked the question, what's better to do? Should we do it ourselves, or should we hire a bookkeeper? What would make it worthwhile to actually fork over some money to have somebody else do it? It's not a question that I can just give you a pat answer to. You need to think about things like, how much will it cost to hire a bookkeeper, and what do we have in-house by way of volunteer time and expertise? Basically, if you think that the bookkeeping is relatively easy to do and within your scope, then it's a no-brainer. You should probably be doing it yourself. If you find it difficult to learn and or expensive to do in-house for various reasons, training, transmitting from amongst volunteers, etc., it may become more practical to farm it out. Note that there are plenty of accountants and bookkeepers out there who will not have a lot of not-for-profit experience or heritage organization experience. They may be entirely wonderful at what they do, but they may be looking to you for guidance to help them understand exactly what your needs are. So don't be selling yourself short. The expertise that you have at managing your organization is important to the accounting. You need to understand exactly what's going on within the organization in order to be able to structure reports that are meaningful for your own decision making. So if you're working with an outside individual, be sure that you're sort of hand in glove with them to help them reflect back to you reports that are going to give you what you need. Even if you do it yourself, you may find that it's useful to have access to outside professional expertise from time to time if you need to have some assistance with tax matters or formal accounting reports for any particular purpose. I wanted to say a word about efficient reporting. One of the hard parts of working in the not-for-profit sector is just the number of people who need to get financial information from us. We've got an array of internal needs. So the folks working for your organization need accounting information so that they can do what they do, so that they know exactly what's going on financially and what their results are. The board of directors needs reports. Now, between those two things, the distinction may be that the hands-on person who's actually executing the programs needs to see everything in detail. They really need to know what's going on so that they can make the appropriate decisions about spending and to know that they're hitting their targets for revenue generation. The board of directors may or may not need to see the detail. So you may wind up compiling two different reports, one a summarized version of the other, to take to the board meeting. When you go to your members, particularly at your annual meeting, you need a report to take to them. So there's another use for a group of people who are maybe a little bit less directly connected, maybe a little bit less familiar with the details of what's going on. Maybe they don't need nearly as much information, but you need to be able to report to them in a way that conveys the financial information they need for their decision making, which would be around voting for the board of directors. The best thing about managing internal reporting is that you can talk amongst yourselves, figure out what points of information everybody needs, and negotiate how reports will be structured. Conversely, there are a whole list of people outside your organization who may need reports from you, and usually they have prescribed report forms. Therefore, your system needs to be able to produce what it is that those outsiders are asking from you. So if you're getting ministry funding from CMOG or Hodge, or if you're getting funding from the Ontario Trillium Foundation, or any of the other municipal, provincial, or federal sources, you'll probably find yourself filling out an application form, and you need to be able to categorize your information to suit their needs. Depending on your situation, you may be producing taxation forms related to harmonized sales tax or payroll. I know that many of you are registered charities, so you'll need to be cranking out a T3010 charities return at the end of the year, which also has an array of expense categories that you need to adhere to. If you have a lending relationship with your banker, they may also require reporting in a specific format. So how do you manage all of that information? How do you kind of corral things so that it's not painful every time that you've got to produce a different report? One of the goals of your accounting system needs to be to create a group of categories that will meet all of these reporting needs. So what I would suggest doing is gathering all of those external report forms, lay them out on the table in front of you, and make a list of all of the revenue items in all of them. Compile that list together. What you'll almost certainly find on the revenue side is that there's a fairly significant degree of overlap in terms of what different funders or folks want in terms of revenue. In the not-for-profit sector, we've got three basic sources of revenue. We've got self-generated things that we sell, memberships, admissions, gift shop, merchandise, etc. We've got private philanthropy expressed through donations, attendance at fundraising events, people do bingos, Nevada tickets, that kind of stuff. And we've got public support. So those three categories, usually referred to as earned, private, and public, pretty much cover the ground in terms of revenues. You need to do the same thing for expenses, and here's where I expect that you'll see more variability. For instance, the expense categories on a CMOG grant application are going to be very different from what the Canada Revenue Agency is looking for on a T3010. Your best bet is to list all of the categories that everybody needs, and then try to organize them, put like things together, and try to see where the commonalities are. The best strategy from my point of view is to break all of your revenues and expenses into the smallest reasonable units, for the reason that it's relatively easy to add small categories up to produce a report rather than to try and pick apart one big category. So for instance, you'll find that on the charities return, the Canada Revenue Agency wants to see detail on travel, they want to see how much you spend on professional development, they want to see how much you spend on office supplies, rent, etc. If you look at the Ontario Trillium Foundation's forms, there's one category for administration, or at least I know that they've been revising their forms. The last time I saw their forms, there was one line for admin, which would potentially embrace all of those things. So in your own internal records, what you need to do is break it out to the maximum level of detail and then figure out what's going to add up to the lines on each of the funders' forms that you need to look at. Now, I wanted to spend a bit of time on budgeting tips. You see that we're getting down to the last 10 minutes or so, so I'm hoping that people are okay if we maybe let the Q&A go a little bit over time. But I wanted to run through a few ideas here. When you're building your budget, same strategy can work very well for you. Build up from smaller units to bigger ones. So a lot of organizations find it very effective to design budgets for each individual program, project, or event, add those up, put in an allocation for office/overhead/general expenses, and voila, you've got your operating budget for the entire year. You may want to have a good think before the budgeting process and try and centralize some goal setting. So for instance, the board of directors or maybe the executive director, depending on how the organization is set up, would want to propose specific goals. For instance, it is our goal to have a break-even budget next year, or it's our goal to improve in various ways next year. So think about what the overall goals for the organization should be. But then in terms of budgeting, I just wanted to propose the idea of distributing the workload. So the strategic reason for this would be to get buy-in. If you're asking program volunteers to take charge of different aspects of your organization, asking them to be part of the planning process can encourage them really to take ownership and also to get familiar with the financial aspects of what it is that they're doing. Now, the budget approval has to be centralized. Each organization needs to have its own fiduciary structure. If you are an incorporated not-for-profit organization, you need the board of directors to give its approval for the budget. So that is really basically a requirement. If you're operating within a municipal structure, there will be another type of budget approvals process, which presumably would lead up to the municipal council, which would be in the parallel position to a board of directors. When you're designing your budget, work backwards in time. I had started out by saying at the beginning that the gold-plated standard would be to approve the budget before the year begins. So you need to think about when you have to start that budgeting process to give yourselves enough time to work it through and get something approved before you actually start work. Plan for contingencies. So do some what-if thinking at the outset. What if things went really well? What if things went really badly? What would we do? You'll probably be able to imagine some of the major decision points or things that might take place during the year that you might want to plan for. There are a couple of options around this. Now I'm thinking about contingency, I guess, mainly from an expense point of view. What a lot of organizations will do is build a little bit of padding into their expense lines. So this goes back to the idea of conservatism. Contingency allowance might be conservatism and then some, just to allow a bit of leeway on each line. Another strategy is to have one expense line in the budget called contingency, where you just stick a number in there that gives you a bit of play in your expense budget. Many funders actually have a line called contingency in grant application forms, so you may be familiar with that. The one caveat would be when you're actually proceeding through your year, you wouldn't ever actually bookkeep anything to contingency. You would actually name your expenses to whatever your formal categories are. Try to anticipate opportunities that might arise during the year. So one of the tricks of the trade for not-for-profit managers is to have antennae up at all times about new grant programs that might be coming down the pike, new projects or new opportunities to collaborate with peers. So organizations are often in the position of having a bunch of irons in the fire, ideas that may or may not come to fruition. The question would be, should I be including all of those in my operating budget? Well, there's no right or wrong answer to that. What I would suggest is that at the start of the year, when you're developing that operating budget, you might choose to omit the more speculative ideas that you have in mind and focus on things that you are confident are going to come to fruition. And then if those additional things turn up, then add them as you go along. Another thought would be to be alert to the full impact of program changes. So when you're adding new activities or extending or expanding something or discontinuing or shrinking, you need to think through how this change affects every aspect of the organization. You've got to consider the impact on staff time, volunteer time, office expenses, facility expenses, all of the ancillary things that make any given program or project work. You've got to consider whether something that might be, on the face of it, money losing is actually a favorite thing out there that drives support for the organization. Another thing that organizations often wind up looking at is grants that are ending. How many times have I seen people get multi-year Trillium grants? I can practically see some people nodding. You get to the end of a 3-year Trillium cycle. The tail end of that grant, the last installment is looming on the horizon, and you're going, oh dear, we need to figure out how much of that grant is paying for things that have become part of our normal operations. So bearing all of that stuff in mind, trying to anticipate the total effects of change and dealing with that in the budget as a whole is very, very important. As you work through the budget, you may go through multiple versions. You may be in a position of hearing about major items after your year has started. All sorts of things might happen. However, I would propose that the greatest strength in the process would be to pick a moment, whatever moment you think is the right moment to approve something that is the budget, the benchmark against which we're going to measure our year. So my recommendation would be to have a plan that is the plan for the year, not to say that that plan isn't going to evolve as the year progresses, but to choose something that will act as a benchmark so that when you're looking back on the year, you can say, well, at the outset, here's what we thought would happen. And then you can look at what actually did happen with reference to that initial plan. And that's one of the variance tools that helps you assess with a reasonable degree of fairness and accuracy how far you deviated from your expectations during the year. And it's not to say that change is necessarily bad, but that one of the ways of measuring the organization is to say, how did you deal with the cards that you got in your hand? Did you roll with the punches effectively? Did you use your opportunities well? And comparing what you thought would happen against what did happen is one of the critical things to do along the way. Now, the technical way to manage this would be to add a new column to your budget document. So thus far, in the imaginary budget document that we started with at the beginning, was a column for the budget, a column for the accounting actuals, and a column for the variance. You need to add a column to that mental map that would be called projected actuals, and that actually becomes the revised budget for the year. Your projected actuals are composed of two things: the actuals for the year to date, so we've got a certain amount of experience, a certain amount of stuff has happened, and then your rebudgeting for the balance of the year. So that gives you enough columns and enough points of comparison that you should have a pretty thorough perspective on how your finances are evolving, and you should be able to critique exactly what's going on. Now, you would complete your financial cycle with a final evaluation meeting. So this would be the last hurrah of the process of comparing budgets and actuals. What can we learn from our evaluation of this year that we can take forward into the next year? So hopefully what I said tonight will give you some assistance with thinking about your financial system in a way that helps your organization build experience that feeds into your success. And I think that that's pretty much what I had to say. Well, actually, I'm going to say one last thing before I pass it over to Q&A, and that is in the resources, one of the things that Allison will be sending you is a bunch of budget templates. So I've been talking about your mental image of that spreadsheet. Well, you'll have an actual physical spreadsheet coming your way. It's actually a workbook of spreadsheets of different ways in which you might think about a budget with formulas and whatnot built in. So, having said that, thank you very much for participating this evening. I'm more than happy to hang around online and answer any questions that you have.
Great. Thank you so much, Heather. That was wonderful. And as you said, we are going to run a little bit over time, but we've got some really good questions, so hopefully that makes it all worthwhile. We did have a couple specific questions that were answered throughout the webinar, but I'll just go back to someone who asked, is it possible to run an organization's finances successfully without consulting an accountant, or would you recommend an annual consultation to ensure the financial health of your organization? And a little bit later, we got a question that sort of falls under the same umbrella. Do you suggest standard financial training for all board members of heritage organizations at the beginning of their term? And if so, what kind of training or resources would you recommend? So a lot of questions here about what kind of check-ins or consultations should happen and whether all board members should have that training as well.
I don't think that it's necessary to work with a bookkeeper or an accountant. I think you can get away without that. I think that it can be a tremendous support to the organization. You really need to evaluate your own situation and try and figure out what's going to work best for you. In terms of financial training for board members, oh yes, 100 times yes. One of the critical things would be to introduce the board members to the standard financial documents that you need them to be familiar with. So they should be familiar with your budget document, the planning document, and they should also be familiar with whatever reporting tools you use, whether that is an internally created reporting spreadsheet or whether it's audited financial statements or whether it's both as the year moves along. So making sure that people know what they're reading is really important. When I was pulling together resources, I was trying to think it through with exactly this thing in mind. So there's a couple of goodies, I think. And actually, there's a couple of goodies from Alberta. Oh my goodness, the Mute Heart Foundation in Alberta put out this fantastic book on board member responsibilities. So I've consulted it any number of times. It's a really good read, I find, and thorough. And Alberta Culture has also put out a document on board budgeting. So the links for both of those are coming your way. I would say that the time invested in bringing board members up to speed at the beginning of the year will come back to you as the year goes on. My experience with boards, if you have a group of people who are not happy dealing with numbers and don't feel comfortable, they will shy away from it if they're given half a chance. So the thing is to just grab the nettle, seize the nettle, and make people read those financial statements every meeting. Even if they hate it, by the end of the year, just through growing familiarity, they will get better and better at it.
Great, thank you. A very specific question came through that I wasn't sure when to bring it up, but someone was asking about the HST return form, which is GST 34, I believe it was, and a lot of those forms are now, you have to submit them online, like they don't let you kind of look at them online to see what they look like until it's time to submit them.
Right.
But the gist of the question was, do you have to include grants received on the revenues lines of those forms?
I'm about 99.9% sure that what the government is looking for on those HST forms is your revenues, total revenues, rather than taxable sales. Like the temptation would be to say, we sold $1,000 worth of taxable whatevers, therefore I'm reporting $1,000, and the $130 of HST therefore makes sense proportionally. But what they actually want to see, and I'm almost convinced of it, is the total revenues. Now, I'm hesitating because I have learned over time, oh my God, check the form. Don't guess, have a look at it. So reading those things, yes, is very important. You can actually get non-personalized copies of that HST return form, but you have to get them directly from the Canada Revenue Agency. They don't give them out online. So I realize that that's a nuisance.
That's right. Actually, I was looking into this while you were speaking just after I got this question, and you can request non-personalized versions of those forms to look at them from the CRA website. You just have to request them, and you have to send in a form saying, I'd like this to be sent to me, because they're not automatically available for download. The second question was, should grant revenue and expenditures be separate from the budget? It inflates the budget. That's the question that came through. So I'm wondering if this person is thinking about grant revenue and expenditures related to grants. Should those be kept on a separate budget, or do you recommend always making sure it's in the main budget?
Okay, trying to sort of imagine what the situation would be. For for each grant project, you would be required to submit a budget for that grant by itself. So you would have, in order to get the grant, you would have prepared a budget showing how much money you're asking for and how you would plan to spend it. In terms of whether that goes into the annual operating budget, I would say yes, because those activities are part of your organization's operations. Now, there might be specific circumstances where it's not such a hot idea. For instance, if you're working with another organization, the question is, should you both report the entire project? If you're collaborating with an organization and you're each putting in 50% of the expenses and getting 50% of the revenues, should you report your own 50% or should you report the whole project? If both organizations will report the whole project, that would be inflating it. That's something that the Ontario Arts Council commented on specifically with respect to co-productions in the arts world, and I'm guessing that the heritage world might be the same. If it's 100% your grant, though, for your organization, I don't see any reason why you wouldn't report it as part of your operation. Usually for purposes of generating money and support, it's better to try and include things to show the fullness of what you do and who you are and the impact that you have.
Great, thank you. Just a few more questions. I do realize we're now past 8 o'clock, but I'm trying to group them together so they make the most sense. One question that came through is, what is the retention schedule or the retention time for the book of original entry? When can we get rid of invoices, et cetera?
Oh, okay, there's another one that would have me flying to the CRA website. You know what I'm going to do is send you the link.
Yeah, a number of people did ask for it, and I was going to say, I was going to email you after the webinar, so we will be including that information, the CRA retention schedule, with our post-webinar resources. The next question that came through is there any Mac accounting software at all right now that you can recommend? And the second question is, do you know of any accounting packages that generate the required reports for the Hodge program, or any of these CMOG, any of those specific grant project programs?
Right. Accounting software that you buy will not have anything that's specific to any given funding program. You would have to configure it to what your needs are. In terms of Mac software, I actually did a job for a client who was using something called MoneyWorks from New Zealand, which is totally cross-platform. You can open it up on a PC and then put the CD into a Mac and off you go with the same file. It does come with some limitations. Okay, now by memory, I've only used it at that one client. It's good on sales tax. They've got it configured to do sales tax for New Zealand, Australia, Canada, US, UK, basically the English-speaking world, but it does not do payroll. So if you've got payroll, that would not be a great option. In terms of cloud-based software, I have to say I have not gained a lot of familiarity. I know that there's, QuickBooks in the cloud, Sage in the cloud, various things that may be possible to use on a Mac. What I've been following is mainly certain LinkedIn groups where the complaints about those things have outweighed the flattering comments so far. So I haven't got a lot of suggestions to offer for Mac users, I'm afraid.
Well, thanks for the suggestions you did have. Hopefully that points people in the right direction. And like you said, they're still building a lot of those options for Canadian users, so we're still waiting for those to arrive in the market even.
Yes.
The final question I have came through, and it's, are there types of income that a charitable organization could earn that is taxable as income to that group and require filing an income tax return? For example, we sell books, earn interest on savings accounts, and have an annual plant sale.
Right. If you are a registered Canadian charity, you are exempt from income tax by definition. That's stated in the Income Tax Act. If you are a not-for-profit organization and you don't have charitable status, I sadly have to tell you that this is an evolving thing. So one of the things that came out, I think, last summer was that the CRA has been looking at not-for-profits. People have been claiming exemption and certainly believe that their sales are exempt as not-for-profits. But the CRA is looking at that to see if income tax ought to be levied in any circumstances. So registered charity, exempt by definition, not-for-profit that lacks charitable status, I would say my understanding would be by and large exempt for the moment. That would be one instance where you might want to actually consult with an accountant to make sure that your own personal circumstances are being dealt with appropriately, and stay tuned for further word from the Canada Revenue Agency.
Right, so it's good to always have an ear to the ground with the CRA and what they're coming up with and what's being done at that level, so thank you.
Yes.
So those are all the questions we had. Heather, did you have any other things you wanted to end on or final thoughts?
I don't believe so. I didn't actually prepare any final thoughts.
No, that's
I hope
okay.
everybody has an absolutely wonderful fiscal year.
Well, that's a great note to end on. So I'm just going to say a few words about our upcoming webinars. The next webinars in our series are held in partnership with Community Heritage Ontario, and these are all to do with municipal heritage committees and heritage designations under the Ontario Heritage Act. On Thursday, March 26th, we have the role of municipal heritage committees. Thursday, April 9th, we have Part 4 designations, and Thursday, April 16th, we have Part 5 designations. So if you're interested in learning anything about these parts of the Act or the role of these committees in your community, please sign up on our website just like before. And these sessions are $20 per participant. If you have any questions about webinars or anything that you've seen here today, or you want to get in touch with the OHS, please feel free to email us or become a member, and you can find out all about our programs and services on an ongoing basis. If you're not a member already, you receive a discounted subscription to our journal, Ontario History, 5 annual issues of our newsletter, the OHS Bulletin, discounted admission to OHS webinars and programs, and access to members-only online content, including past webinars and our blog on our website. So the webinar we recorded tonight and other webinars are made available right away to members on our website and eventually rolled out to the public, but as a member you get a kind of sneak preview if you miss the live session. So get in touch with our membership coordinator, Christina Perfetto, at members@ontariohistoricalsociety.ca if you're interested. And a big, huge thank you to our speaker, Heather Young. Thank you for a wonderful session, very informative. And please follow us on Ontario History at Twitter and like us on Facebook. Thank you, everyone, for participating, and thank you, Heather.
Thank you.
All right. Thanks, everyone, and have a wonderful evening. And sign off and say good night.